Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is to get everything you need to know in 90 seconds at 9 o'clock with news. The US Fed has in fact now raised its policy rate by 25 basis points to 4.75% as expected. It also said that more rate rises are likely because its battle against inflation isn't won yet. The New Zealand dollar slipped slightly on the news, but bond markets barely moved. This Fed review confirmed market positioning. But before that, there was other important data out today in the US. First, there were two parallel PMI reports out overnight for the American factory sector. The widely watched ISM one slipped slightly further into contraction, but the new orders component was particularly weak. The internationally benchmark market one reported the same decline, but this is a sharpish recovery for this survey. They say new order flows only softened slightly. For both reports, that's now 3 months of contraction. This weekend, we get the next US non-farm payrolls report, and that is expected to show 185,000 rise in payrolls, which will be less than for January than December. Today, the precursor ADP employment report said the gain for private sector payrolls was only 106,000, and that was far less than the 178,000 expected, and the surprisingly positive December level of 253,000. And the closely watched JOLTS report of job openings was released for December today, and that reports a continuing hot labour market. These rose to more than 11 million in surprising strength, when a fall to 10.25 million was expected. There is no uptick in layoffs here. In fact, this report is a major positive surprise. In China, it is a fine margin, but the private Caixin PMI survey did not confirm the official Chinese factory PMI with a shift to an expansion. The Caixin survey still reports a small contraction, but new orders shrank for the 6th straight month. In Japan's factory PMI stabilised in January, but that's still a small contraction. EU PMIs saw their manufacturing downturn easing further and cost pressures fading, but they're still reporting a small contraction there too. EU inflation fell to 8.5% in January when a 9% rate was expected, and the December rate was 9.2%. Falling energy costs are certainly helping there. Although this is a good result, tracking in a positive direction lower, we should also note that core inflation didn't budge there. The US Treasury 10-year yield starts today at 3.46% and down 7 basis points from this time yesterday. And the price of gold will open today at $1,924 an ounce. That's dipped $3 from this time yesterday. And oil prices start today sharply lower, down $1.50 at just under 77 US dollars a barrel in the US, while the international Brent price is just on $83 a barrel. And the Kiwi dollar is softish at 64.4 US cents. Against the Australian dollar, we start much lower today at 91 Australian cents, and that's a 0.75% fall. Against the euro, we're 0.5% lower at 58.9 euro cents. That all means our trade-weighted index starts today at 70.9 and down 50 basis points from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.